Um, so yeah, we're about to look at Euro USD. I'm gonna delete everything real quick. So give me a second. Alright, I'm gonna go to the monthly chart. Damn, appreciate you. I didn't know that. What is that?
Remove all drawing tools. The last one,
I ain't know that. That might just save my life. Appreciate that. So yeah, what you want to first look at, you want to go to the monthly and see what it's been doing, right? So since January of 2018, it's been in a downtrend, right? It's been in a downtrend. You can do this if you want, but it's really not necessary. You can put a little trend line on the monthly uh chart. I really would do it like this. Boom. See, it lines up. You can do that on a monthly chart just to get a feel of what's going on. I could put a few lines on here. I could put one where this high is. I put one right here. And then I could put another one right here. I'm basically putting one at the low and putting one at the high right now. That's what I'm doing. I don't really see too many major levels, but I can put one right here. I basically put that one right there because of this area right here. This was a major, position, because this is almost like a triple bottom, or it's probably like this is an area where price kept coming to and rejecting. You look at all of these wicks. When you see wicks like that, a bunch of wicks from the same region rejecting the same zone, that's a major zone, especially on the higher time frames. So the fact that it did that and it lined up with this wick right here, and it lined up with this doji right here, it lined up with this, and it lined up with this wick, lets me know that that's a very, very major support and resistance line. So let's go to what y'all say. All right, drop a 1 in the chat if you understand why I made this one. Why this one is so strong. This support and resistance. If you don't, drop a 2. All right. Somebody take their mic off mute and explain what a support and resistance line is.
All right, so like support and resistance, you looking for your ceiling and your floor. So how you put that line on the top of all of them wicks, that held true in multiple areas. So that's a strong support.
So what do you mean by held true? Let them know what you mean by that.
When I say held true, so you see how many candles touched that line and moved away from it. So like in a row, you got that first part. I know you don't like W's, but like that's a clear W for me. So like the first part of the W,
I like W's.
Got multiple rejections right there. And then you saw it tried to peak up and the wick went past it, but the candle body didn't. So then you move over to the downtrend and you see like it wicked down to it and finally broke through with like a larger body candle. You can always look for like a large body candle to break through a strong support and resistance.
Mm-hmm. All right. Appreciate you. So the reason why I did this one, after I explain this, y'all should really all understand why I put these on. So this one right here, I put it right there because in the region that I'm looking at, this is about how far back I zoom out when I'm marking up support and resistance. There's no point of doing all that and marking all of this up because whatever applies right here, these same lines are going to be just as strong back here, right? These same lines are going to be just as strong on this side. All right, please understand that. Excuse me. So what I mean by that is anything that you mark up right here, you can do what you call back testing and going back in history to see when how many times it touched that same zone in the past. And majority of the time, even if it's not the best support and resistance line, you can still go back to 2003 and it'll still be bouncing off that same area. So that was just a random, yeah, by the way. So if you look, what is it doing? The same zone from before, bouncing off, bouncing off, bouncing off. Then it broke through. All right. If you don't know, somebody put in the chat. What is
back testing, right?
Yeah, it's back testing. So what and put in the chat what it means. I mean, what is it called when price breaks? What happens when price breaks through a supported resistance line? What is it usually gonna have to do?
Retest.
A retest.
Gonna have to retest, right? So if you look at my support and resistance, so what retest means, by the way, is if it comes to a resistance, it's gonna break through and come back to test the resistance, newfound support that it broke through, right? Just to see how strong it really is. It's gonna always come back to testing, all right? Even if it doesn't fully touch it, it's gonna do it every time, right? So understanding when it breaks and retests, now it's either gonna do two things. It's gonna bounce off and go to the next support or resistance, or it's gonna break through and then retest. Then from there, it's either gonna bounce off or it's gonna break and retest. All right, it's very, very, very simple. Very simple. So if we look, let me delete these. So if you look at all of the, also another thing, um, when price breaks through these major support and resistance lines, so what I mean by major is the ones on the higher time frames. So we're on as high as it can get. We're on the monthly. When price breaks through these ones, it's usually going to be an engulfing candle. It's usually going to be an engulfing candle, especially on the higher time frame. So what I mean by engulfing, this isn't going to be the prettiest, but this is what I mean by engulfing. You might have a short body. You might have a short body for one a buy, right? Or bullish candle. If you don't know, the other word for buying is bullish. All right. So if you have a bullish candle, if you have an engulfing candle, that means the next candle that comes is usually going to be, well, it has to be a long bearish candle. It has to be in order for it to be engulfing. So that means it's going. That was just random. And that means that in order for it, let me delete this plan. All right, so that means that in order for the next one to be engulfing, it has to be way longer than the previous one. All right, this right here would be, excuse that, this would be a bearish engulfing. because it's way bigger than this one. It's basically engulfing that one so big because it's so much larger than it. All right. So we can test the strategy out of engulfing candles and the break and retest method on these lines. And mind you, we're in 1998. I want y'all to realize that we're in 1998. This is 1998 and 1997. The same lines that I marked up on in the end of 2019, 2 decades. All right. So we're gonna start right here. It was rejecting this line, this area, and it broke through, and it was a bearish engulfing. Drop a one if you with me so far. Drop engulfing in the chat if you see the engulfing, if you're with me so far on that, so I can make sure we're on the same page. I really need like 70. Need like 70. If you don't understand that, like this, look, bearish engulfing, way bigger than the previous one. But like most people, I see like a lot of people just not trying to do what I was saying at the beginning of the call, which is engage. You're depending on everybody else to engage for it to continue. You'll rather have other people do it instead of yourself because you don't want to take action. All you have to do is say engulfing. Like it's not for me, it's for you. All right. So engulfing, it broke through with the engulfing bearish. We're coming to the next one. We come to the next line that I marked up, right? And what did it do? It broke through and retested. So first one, engulfing, right? We got our engulfing candle. That's the first, test of our analysis that I said. That's something that's gonna happen every time, right? Then right here, we have a break and retest, all right? Now when price is between zones, it's gonna do what you call ranging. It's gonna do what you call ranging. It's called consolidation. Usually if it's just moving sideways, but it can consolidate and not range. It could literally consolidate and just go sideways like this. I will give you an example. That's how I knew Bitcoin was gonna buy last night. People was really saying sell. I don't know where they saw it at. Okay. Okay. Look at this. This is what you call real consolidation. Real consolidation, right? It almost looks like a peg. I'll show you what a peg is. You see, I saw this bearish engulfing, right? It's been consolidating for a long time. It hasn't been making big moves like it did a couple months ago when all of this was happening. But it made a nice drop right here. It made a very nice drop. And then it started consolidating, right? It started consolidating and it wasn't breaking any lows. It wasn't breaking any highs, right? It was stuck between this zone right here. So I can even mark up a little box just to, so mark up a little box like this, all right? All right, let me see what y'all say to this. I use Bitcoin as yeah. So it was consolidating right here. It made a big drop. So if you don't know, a gap, usually what people look at for a gap is when you have like a big space between the candles. So you might have I'm really like animated and engaged with my cause, so like I try to make it better to understand for y'all. So drop it with you in the chat if you with me, if this call is helping you so far. Damn, I'm steady deleting. All right. So you might have a bearish candle right here, right? And if you don't know how candles work, please download Japanese candlestick patterns. We have open, close, low, and a high. I might go over that. Drop a one in the chat if you need me to explain open, close, low, and high of a candle. Y'all good? I'll go over it real quick. All right. You have an open, a close, a low, and a high with every single candle. All right. So let's show you what an open, close, a low, and high is. I'm gonna just mark these up. All right. So put it. What? Somebody tell me what's the technical word for selling candles?
Bearish.
Bearish, right? So in order for something to be bearish, it must be dropped. It must be going lower than where it started, right? It must be going lower than where it originally started. That's the only way that something can go down. In order for something to go down, it has to start at one place and go lower than where it started. That's the only way that something is physically down. Physics, right? Simple. So in order for us to understand this, we could put an arrow. Understand that when this candle opened at his respective time, that means that it started right here. Right? Right here. Point at this. Started right here and it stopped right here. Alright. If you don't know how candles and their time frames work, that's also a very serious problem that you have. Alright. A very serious problem that we need to solve right now. So if we're on the hour chart, right? I'm sorry for the people who understand this, but I gotta break it down for everybody else. All right. So if we're on the hour time frame, right? The hour candle. We're looking at this candle right now, right? What time did this candle open and close? What time did this candle open? This one, not this one, but this one. Looking at my time, not y'all. What time did this candle open? The fact that only one person answered that and only one person answered that right is a serious problem, guys. So let's attack into that. I didn't think I would have to. It's 11 o'clock. All right. On the hour time frame, the hour chart, every candle represents 1 hour. Every single candle represents 1 hour from the top of the hour to the close of the hour. All right. Meaning a candle opens at 12 a.m., 1 a.m., 2 a.m., 3 a.m., 4 a.m., 5 a.m. And it repeats that every single day. So with that being said, what time did this candle form? What
2
time?
a.m.
Huh?
2. Don't that say 2?
No, it's not 2 o'clock.
Oh, man, that's
How
right.
you 2 o'clock yet? How would this one be 2 a.m.?
Well, what do that at the bottom it say October 19, 26, 2, right?
Don't pay attention to that.
Oh.
Just pay attention to what, like how I explained it. So
11.
Oh, you want us in our time. Oh, my bad.
9 o'clock.
my clock. So this one formed at 12 a.m. correct? 11, 10, 9. Very, very, very simple, guys. So I'm gonna give you all an example. In any second now, a new candle is going to form because it's about to be 1 a.m., right? So let's just wait.
Can I ask, do you agree that that's like a rising wedge?
Mm-hmm. So y'all see, it just formed. Y'all can't even see it yet.
I got it on the 15-minute. I got an entry on that already.
Oh yeah, you lit.
Yeah, I got my entry. My stop loss is under the bottom of the second. I guess that's like a little hammer, little situation right there. But off the 15-minute, it formed a nice little morning star, so I caught entry.
Shut. Oh.
So do you want us to say Central Standard Time or the time?
I wanted y'all to look at my clock. That's all I wanted y'all to see. My clock is at the bottom right.
Oh, there's like a picture box right there. I can't see that clock.
Right here?
Yeah, like you know how we on our phones, the little yeah, that's where the little picture box sits. So like if you had your camera on.
Alright, cool. Alright, yeah. Just look at that. Just look at that time. Alright, so if we look, a new candle just formed because it just turned 1 o'clock. Alright. Every hour a new candle is gonna form. So if you ever need to see what time a candle form, all you have to do is look at your time frame and just do the subtraction. It's very, very simple. This would be 1 a.m., 12, 11, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, 12, 11, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, 12 a.m. This was 12 a.m. I don't know what the time thing is at the bottom. I never paid attention to that. It's wrong anyway. This right here would be 12 a.m. So yesterday, this is the first candle from yesterday. So the big move, you can see what time the move happened, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 a.m. One move happened at 10 a.m., 11, 12, 1, 2, 3, 4, 5, 6. And another one happened at 7 p.m. All right. Drop a with you if you're with me on that. If you're paying attention to what's going on with that.
Jules, son.
With you.
I think that a lot of people have a tendency to overcomplicate things and get the preconceived notion that this is complicated, so they think that they have to do the absolute most to understand things. But when I'm explaining stuff as simple as I'm explaining it, that's literally as simple as it is to be. All right. And a lot of people confuse themselves with understanding these time frames. So I'm gonna show y'all another one. 15-minute time frame. Right?
There goes my entry. Oh, sorry.
So 15-minute time frame, right? So what time did this candle form if we're doing a 15-minute time frame? Please erase that.
12:45.
Yep. Please erase that. It's an eraser on there. All right. Appreciate you. Yeah, 12:45. All right. What about this one?
12.
Yep, 12. Because it's every 15 minutes, right? A lot of times when I ask people to explain this, excuse me, they'll be like, oh, it's 104 now. The next one will be at 119. That doesn't even make sense, because if we're doing it like that, then the times will be all over the place. Literally, they wouldn't be structured. They'll be all over the place. So it's every 15 minutes starting from the top of the what? From the top of
Hour.
the yep, top of the hour. Seems like y'all got that. 30 minutes, every 30 minutes. Very simple. All right, so let's go back to the hour shot. Just to explain why I saw what I saw. Um, yeah, it was looking like a pig, and it was basically within the zone, and it actually kind of was ranging just a little bit. It was going from the top to the bottom. I ain't noticed that, but I still wouldn't have traded that. I put a buy stop at the end of Tony call. I was looking at Bitcoin. I forgot who asked me about it. It was probably um I forgot, but it was they asked me about it, and I was like, because people were saying they were selling. First off, the sale already happened, right? So if we see this big, what type of candle is this? It's two words that I'm looking for.
Bearish engulfing.
Bearish engulfing.
And what's okay? Yeah, it's two terms that I'm looking for. Sorry, that's one of them. What's the other one?
Impulse.
Yep. Y'all see how she's a real student of the game. Did you learn all of this stuff from putting in your own work and watching everything that you could, right?
I'm on charts all day, every day.
Me
I
too.
watch IML TV like a hawk.
Okay.
And you, not being funny, you and Tony be clearing me up at night. Like the morning star and the evening star. That's how I just killed that entry.
Mm-hmm. Right.
Cause
So
like right there when it first dropped, there's a morning star. I'd have took that entry and just waited for the super buy.
yeah, exactly. So yeah, she basically just engaged herself. She made herself self-sufficient. If you want to be a trader, everybody wants to be a trader. Everybody wants to make a bunch of money and know everything before they tell somebody about the opportunity. Well, if you want to do that, then act like it and put in the work to actually learn everything that you can. Like people are saying they want to wait till they make such and such before they tell somebody, but they're sitting relying on signals and not learning. And then they get mad when some of the signals don't smack. Who what? Who are you? I don't know. Nobody. So you got to make sure that you're paying attention to everything like this. So this right here is an impulse candle and a bearish engulfing candle. So when you have these engulfing candles or impulse candles, this is a gap. This whole area where it formed this at, that's a gap, right? This is a gap. So let me show y'all. Oh, that's what I was explaining. I forgot. I'm like, look, candles go. I don't know where they went, but I'll draw it for y'all one more time. All right. So if you might have a little candle like this, you might have a little candle like this, and then you might have another candle form all the way up here, right? So that means that this right here is a gap. That's a gap, because every single time that price opens and closes is gonna make it even to the next one. That's why I just explained that to y'all. Meaning that, wow, when it closes, it's gonna open where it closed. It's gonna open where it closed. It's gonna open where it closed every single time. So if it doesn't do that and it forms a gap, that usually means that during the weekend, the economy and news and fundamental things made it so the currency and the price between the currencies fluctuated a lot. And so since it's the weekend, the candles aren't being formed because the market is closed, meaning that it can't accommodate for those movements. It's not going to accommodate for those movements. So it's going to leave a gap because say something happens on Saturday, something crazy, or Trump says something, it's not going to be able to form those candles to, fill that in. The price between the two is just going to go crazy, and it's going to end up opening up here, or closing up here when it happens. All right. So that's how one gap is formed, then the other gap is formed. We have big moves like this. Let me delete this. I'm I'm JD, by the way, bro. I don't know. Yeah, I don't know how you got the call. I'm gonna stick to y'all. I got OCD, so that's my fault. I can't just like I hate when professors be erasing the board and then they leave a bunch of like stuff that they didn't erase. Y'all probably on the call like what weird as hell. So yeah, this right here is a gap. So since it made that big move, all of that needed to be filled up. Right? All of that needed to be filled up, meaning that price has to come back up here at one point, and very, very soon, to say the least. All right, price is gonna have to fill all of that up. That's just how gaps work. All right. So if you look, I knew that price was going to have to definitely fill this gap. You can't have impulses like that and it can't be corrected. There are only like rare occasions where price will form a bunch of impulses in a row, like continuous impulses, like long ones like this. Like these aren't huge impulses. These are kind of regular, but it's not gonna ever form a bunch of these in a row or a bunch of these, right? So I knew that the price was going to have to, um, fill that up in the first place. Now I knew it wasn't breaking anything, so I basically put a buy stop up here. Right? I put a buy stop up here. Drop a one in the chat if you need me to go over buy stops, buy limits, and everything like that. It's literally gonna take me a minute to explain it. So drop a one in the chat if you need me to explain that. I'll explain liquidity. It didn't seem like it was a lot of people who needed it. Oh, never mind. I feel like it's a lot of people needing it. That's not saying anything. Hold on, let me drink some water. All right, we need to write this down. Write it down. But I'm basically gonna ask the people, since y'all already know what it is, and y'all probably some of y'all learned it from me. Um, a limit and a stop are two totally different things. Get the stop part out of your head. Like, don't even think like attach stop with this because it has nothing to do with anything stopping. All right, that's just what it's called. All right, so buy limits. Limits are where you think price is going to reverse. So limits equal reversals. Limits equal reversals. Stops equal continuation. Stops equal continuation. All right. So what that means is if you have a limit, that means that prices might be buying or selling at the time, and you think that it's going to do what? What do you think it's going to do? What is
Reverse.
going to reverse.
Come in.
So you will put a buy limit, a sell limit, because you think that it's going to reverse into a sell. So you will put a sell limit at a price where you think that it will reverse. So that means that you might put, like looking at this for example, you might have put a sell limit right here. All right. Basically saying that you think that due to you looking in the past and seeing, how high the last resistance was, like you might look back here. All right, cool. So you see that this is basically a good little area for the last major resistance, right? So you can be like, all right, let me mark this up. Boom. This, since it's going up so crazy, right? This big old crazy buy that it had, you could say, all right, it slowed down right here, right? Because if you see right here, it slowed down, um, and that's because this was our first area of resistance, right? So what I mean by that is, since it was buying, this is a gap, right? This is the gap I was telling you about. But actually, this is a whole different move. It's a whole different move. My fault. But yeah, this right here is a gap. All of this, because it had this long impulse candle. So all of this has to be, filled back up. So you can look back here and say, all right, it's going crazy, it's buying. Let me see where the last resistance was. So you can put like right here, it's the last resistance. If you have marked that up, it could have made sense why when you come over here, price was consolidating. All right, it was slowing down, it was waking off of it. So um so you could say like, all right, boom. These are some nice resistance areas too, but I'm basically gonna mark up the next one I think it might go to. So you might say, all right, cool, it might reverse right here, right? It might reverse right here. Because if you look, it basically broke this and retested it and then dropped. See, it broke through it and retested and then it dropped. It dropped all of these pips all the way down here. This is a downtrend. All right, it just had a long impulse. This is a downtrend. So you can say, boom, that's kind of the where it retested at. Anytime you see a retest like that, especially on the higher time frame, know that that's a very strong supporter resistance. So since it retested that, you can say, all right, this is the next area where I think that, price could reverse, because it broke and retested and it caught these thousands and thousands and thousands of pips right here. This is probably like tens of thousands of pips right here. So you saw that it did that, and it's been selling ever since, which was September 8th, a month ago, right? A month and some change. So you see, it's been selling since then, and you be like, all right, that's the next area, and I think that when it gets to here, it's gonna reverse and sit, right? Drop a one if you with me. Drop one if you with me real quick.
With you.
With you.
Keep going, all right? So you can come over here and say,
One.
you can come over here and say, I'm gonna move it down just to get y'all the idea. But basically, it was literally the same thing. But you could say, all right, cool. When it gets to this point, it's gonna reverse. That's your analysis. You could say when it gets to this point, due to the analysis that I used from before, and all the stuff that I put together, when it gets there, it's gonna reverse. So you will put a sell limit. So if you place your sell limit right here, when price, you would basically put your limit. You would say sell. You would enter sell limit. For price, you would put 105.45.84. Right. You'll put your stop loss however many pips away you want. If you wanted it 30 pips away, I don't know how to come think on that. Just by looking at it. That's all I'm let's say it's like that right there. Actually, with Bitcoin, you would need like at least 100 pip stop loss. So you might put your stop loss like at 106.45, right? You might put it at 106.45, about 100 pips away. and then you'll put your take profit basically at your next area of support. Because when you mark up your support and resistance, I mean your take profits for your sales and your buys, all it is based on support and resistance. So if you're selling something, um, you're basically gonna put your take profits at the next major support zones. Can anybody tell me why you're placing your take profits at support zones for sale? And take your mic off mute if you're gonna answer, pretty please.
Because price usually like it's possible for price to reverse at those levels. So you just want to secure profits and then wait and see what price does off the retest before you re-enter back for that same trend to continue. Or if it reverses, you can catch it on the way up.
Great. All right. So what she means by that is, let's just say that you had a support line right here. I'm gonna make that clear. When you marked up your chart, this was a support. Say you're getting in right here. Um, let's say you don't even see none of that. You say this is your next level of support based on your back testing. You saw that price bounced off of here a bunch of times, right? So you're saying, all right, I'm getting into this sell right here. I got a gap to fill right here, and this is the next area where I think it's gonna slow down. So you would basically put your take profit where you think it'll slow down. And you basically want to put your stop loss about 30 pips away for your any trade. But if you can, you always want to put your stop loss a little above the resistance. All right. You don't want to put it at the resistance. Can somebody tell me why you wouldn't want to put it exactly at the resistance?
Wick fishing, they're gonna try to wipe you out.
Wipe you all the way.
Well, no, it's going to pull you out.
That's kind of the answer. Anybody can answer it differently? All right.
Talking about you? That was coming to answer.
All right. So y'all all answered the same thing. So I was talking about all of y'all. So somebody might put their stop loss right here where the resistance is. If you put it right there, you're putting yourself in a position to have price come up to here before it just bounces off and makes its move, right? If you put it right where it is, price can definitely just hit it and bounce off, right? That's what people say is uh excuse me, stop hunting and things like that, because they're not putting their stop losses in the right way, and they're not using supply and demand, which is something that I'll explain to y'all too. I'll probably be like 30 more minutes on here. Probably end it by 2. I gotta clean up my house and stuff like that for an open house at 8 o'clock in the morning. So yeah, if you put it right here, price could just come up to here and bounce off, literally. But if you put it little above it, while everybody else is getting stopped out right here, you put yourself in a position to not be able to, you know, get that same hit as everybody else. Because usually, if price is going to break a resistance, it's gonna retest it, and it's most likely gonna go up. Every time you see something retest something, it's usually gonna go in that direction. All right. So if it just bounces off, you're good, and it goes back down, you'll be straight. So, and you also give yourself the room to, have that much space and area to leverage. All right. So say you had your TP down here, like I said, you got your stop loss up there. So basically it looks like this. Ooh, to the pain. So yeah, this is basically how it would look. So you're putting your take profit at the next support, and what do you know? price came to it and slowed down. All right, it's always liable to bounce off of these support and resistances. So that's why you want to have your take profit there. Secure your profits and or close it entirely, because this is an area that it could reverse and go back up with. All right. If you look, if it broke when it broke that one, what did it form? That engulfing candle. All right. It formed that engulfing candle. You see this one? What did it do when it broke that one? Formed an engulfing candle. It's not, this stuff is not made up. All right. It's not made up. So yeah, that's how you would do your sales with stop losses and take profits and things like that. It's exact opposite with buys. Like, it's just gonna be based on resistances. Your buy take profits are gonna be based on resistances. Hope that's making sense to everybody. I hope that's making sense to everybody. Alright. Now let me figure out what I was talking about before. Oh yeah, gaps and stuff like that. Alright, cool. Open, high, low, and close. I never even finished that. It's terrible. I'm just dropping so much sauce, getting lost in the sauce. Yeah. Alright. So if you have a bearish candle like this, you're gonna always have that open, close, that low, and that high. Alright. Somebody says. Cool. We had about 10 people fall off. Them the ones that can't hold on, they falling asleep, their eyes is beating them. Or they going and watch their show. They was like, man, it's not, it's getting too boring for me. Money's too boring for me. So yeah, if you have a bearish candle, this will be your open because obviously it has to start right here. This will be your open. And the bottom of the body is gonna be your close. Can anybody tell me what this will be?
The lowest the price hit.
Yep, it's gonna be the low.
Yeah.
This is gonna be the high. What is this part of the candle called?
The
The
real
body.
What about these? The lines on the outside.
The wick.
The wicks.
Those are gonna be the wicks. Alright. So it's the exact opposite for a bullish candle. Alright. Let me show you.
Well, it show you the open, high, low, and close at the very top of the screen if you just hover over a candle. Like that's what the OHLC at the top is.
Yeah, I know. They still gotta, learn it. Yeah. All right. So, in terms of the bullish candle, what would this be?
Open.
Close.
Close.
Close. My bad.
It's the close. All right. This is the close because in order for something to be buying, it has to be going up, meaning that has to be starting from a lower point and going to a higher point. All right. So this will be the open. If you have a bearish candle and then a bullish one, they would literally be line by line. So we can go to one right now. Bearish and then bullish. All right. The close of that bearish is the open of that bullish. All right. So, and then what would this be?
The
Low.
high
Yeah. And that's the low.
and the low.
All right. Very, very simple. So basically what I was looking at when I looked at this was the fact that it had this gap to fill and it was ranging within this. So see, I'm steady all over the place. I didn't even finish the orders. All right, yeah. So if it was coming up to here, right, and you think that it would go back down, you would have the sell, right? Because you think that it's gonna reverse and sell at a certain point, right? If you saw this and you thought that it might buy when it gets to this point, you saw it selling and that you think it'll reverse into a buy, you can put a buy limit right here. All right. So how stops work, like I said, it's a continuation. Like I said, it's a continuation of something. So in order for something to be considered, even if it's not going the way that it's like, if you're trying to put in a sell stop or buy stop, like if you're trying to put in a buy stop and it's not buying already, it won't let you put it in. Vice versa for the sell stop. All right. So like I said, it has to be a continuation. So if I was looking at this, right? Actually, we can go to the example of what I did yesterday. So if I'm thinking that, it's kind of, it's consolidating, so it don't really count, but it is going higher. So it is technically buying. Um, so I thought that it was gonna buy, but with Bitcoin, I don't want to chance it because there are certain, like with regular forex pairs, if it, makes a certain move, if it's not news, it's not gonna, drop 100 pips or 150 pips like gold or crypto. Um, it's just gonna go. It might go like 10 pips or something. So I didn't want to risk it doing a market execution because I knew it was gonna buy. Well, I didn't know anything, but I assumed it was going to buy. Um, so I was like, all right, cool. I'm gonna put my buy stop right here, right? I'm gonna put my buy stop about right here, meaning that once price gets to that point, it's gonna then put me into that buy. But the reason why you put a buy stop, does anybody understand why you would put a buy stop? Why that would make sense to do that instead of doing market execution?
In the event the market retests and goes the other way.
Not retest. You have the idea right, but you got to use the terminology right. It wouldn't
Reject.
Reject.
be
Yeah, reject.
appreciate you. It'll be reject. It might reject this resistance line. If you got it right here, it's very possible for it to hit this and boom, it could have just dropped all of the pips, right? So you can put yourself in a position to not be risking it. Put your point right here because then bow. Once it breaks that resistance that you was worried about, then you can get into that trade and boom, catch it all. And I did. All right. Same thing for a sell stop, right? Somebody might think that once it made this move, it was gonna keep selling, but they didn't catch that part, right? They have FOMO, and they was just trying to get into this sale because they thought it was just gonna keep selling because they saw that. That's not how trading works. I see a lot of people doing it, and it's wrong. That's how you lose all your money, all your coin. All right. If I saw this and I wanted to get into a sale, I would wait for it to break this support. I would wait for it to break that. Somebody else might market execution that foul. They enter the trade right here in the sale. I'm holding the sale. Look, this is the timeline of how they thinking. Man, it's not going nowhere. Oh yeah, it's definitely fun sale. Man, pull back. Oh yeah, I'm in profit. Dang, wait. Now I'm back in entry. Man, it's definitely about to sell. Man, anybody else in Bitcoin? It ain't going nowhere. It's blowing me. I'm about to close. Oh no, bro, it's about to sell. Boom. I know it's gonna go back down. It's just tripping right now. Right? A lot of people are doing that. But the smarter person would have put that sell stop right here. They would have put that sell stop right here. Damn. Boom. And then once it broke that and then it made that move, then you would get put into that trade. But if you don't, then it doesn't happen like that. All right. So just make sure that y'all are being very cognizant of those things. Let me go back to your USD. So yeah, every time all price is gonna do all day is break and retest or bounce off of supported resistance. right? So, like I said, the first example is usually going to be bearish engulfings or bullish engulfings or retest. Wow, broke that one, engulfing. Broke this one, then it retested. Zoning ranging from the bottom to here. You look right here. What did it do right here?
Broken retest.
Right, it retested. Mm-hmm. All right, it broke and it retested. Then it, what did it do? The range and it came down here. Then it broke here. What did it do on this one? Did it retest right there too?
Yes.
Sure did. Retested. Like I said, we're in 1999, 1998. This is the same stuff I marked up in 2019. Right? So everything is valid. That's what back testing means, right? So I can go back to my current price, and that'll confirm to me how valid these support and resistances are. So I don't want to mark up too many. These are perfectly fine with me. But if I'm looking at this and I see this rejection and I see this, well, I see this wick bounce off right here, because if y'all don't understand, like with the time frames I was explaining to y'all and everything like that, just because it didn't close at that point where the wick went doesn't mean that price didn't go to that point. Wicks are almost more important. I would say they're more important than the body sometimes, right? Because it's showing you that price tried to get to this point, but it just rejected off of it. It's rejecting perfectly off this trend line. Perfectly. Boom, 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 bow. Alright. So yeah, bow. Everything is cool for me. I've marked up the monthly and I'm good. Alright. Now I'm gonna go to the weekly and I'm gonna see exactly what's going on. So like I said to y'all, on that monthly chart, it might just be showing the wick rejection. But on the weekly chart or the lower time frames, you could be seeing the actual bodies of the candles, making it to this, right? You can see the bodies of the candles, getting to this trend line and reversing and making this move like that. So this bearish candle with this wick like this, rejecting this area, it tells you a lot. It tells you that it's trying to reject this area. Somebody tell me what pattern this is. Put it in chat because I know y'all gonna blurt it out. And I want people to try to answer. So I appreciate the people who are blurting out. That makes me feel like you are a goat. But I don't want people. I want people to actually think. So what pattern is this? Nobody knows. That is an evening star. One of my favorite patterns. One of my favorite patterns. Let me show y'all what it means. Evening star. It's usually gonna be a long bullish candle, then a small hammer or doji, and then a bearish engulfing. All right. It always has to look like this. Always gonna be that doji and then the bearish engulfing. All right. Always. It's an evening star because the morning star is right here. It's lower. When the sun sets and rises, it starts low and go high and go down. So obviously the morning star is gonna be low and the evening star is gonna be high. Alright. I hope that makes sense for y'all. Literally you can Google Forex patterns or the candlestick uh the Japanese candlestick pattern app is very good. And then yeah, thanks. Can you drop that for me? Um and then we had a candlestick Bible. The candlestick Bible is also very good. I read the Naked Trading and the Candlestick Bible and watching IML TV, and that's how I know what I know. Cool. So yeah, the Evening Star bow. When you see that, it's almost 100% confirmation of the sale, at least for a little bit. All right. So if you see, you know, rejection off of a trend line and Evening Star, you know, etc. Um, that's an indication for a sale. What is the word when you have a bunch of reasons to get into a trade?
Confluence.
Yeah, it's confirmed. Y'all try to put it in the chat so everybody can guess. Yeah, it's confluent. Put it in there so people know how to spell it. All right, cool. Um, so you always want to have confluence when you're trading. You always want to have confluence when you're getting into a trade. All right. If you're only getting into a trade for one reason, that's not valid. It's not a valid trade. Just be honest with you. It's not a valid reason. You want to have multiple reasons to get into that trade. There are very rare chance uh, uh, times where you can do that. Like you might see an evening star or a double top or double bottom on like the monthly chart. That's like a great confirmation that it's gonna, you know, make its move for a long time. So, but you usually want to have confluence. All right. So, bow. Now I can go. Oh well, sure. I ain't even mark up nothing on here. So basically, when I mark up my support and resistance, I just wanna first off, you want to do different colors for different time frames so you can, you know, differentiate how strong each one is. So obviously, my red ones they're gonna be the strongest ones. Those are the monthly charts. So when I mark up my support and resistance, I just want to put it where price is either bouncing off of that area or it's breaking and retesting. All right. So I'm gonna just look real quick. So bear with me. I'm pulling like that. Just as a slight little area. I put it because price was rejecting a lot off of right there. All right, rejecting a lot off of right there. Um, kind of rejected right there. Quiz time. Put it in the chat. Put it in the chat. Put it in the chat. What is this? What is it and what does it indicate? Yeah. What did it do? Like I said, these are like the few chances, times where you can see a one reason to get into a trade. Like it usually has to be on like the weekly or monthly. When you see patterns like this, just know that it's coming. All right. So if you caught that move, say you got in when the candle closed after it closed. How many pips did you catch? Just off catching that trade. How many pips did you catch? Put it in chat. Right. 680. So say you get a lot of money, right? Say you get the capital in a couple of years to, trade like a maniac. You got 20,000 in your account, right? If you caught 680 pips with a standard lot size, how much money did you just make? And you use two positions. So you use two positions on that trade. Just a standard, like not even a big, nothing. But just a regular standard pattern. $6,800. Oh yeah. Mm-mm. I hope y'all know lot sizes. I really hope y'all do, because it don't seem like y'all do. Yeah. Yeah. Alright. Yeah. But people said 13.6. You're right with the two entries. And people said 6.8. You're right with the one entry. Right? I wasn't talking about you until like you not answering. But yeah, y'all got it right. So you could have made $13,000 off of two positions off catching one pattern. That should be crazy to y'all. That instead of going to work for half a year, and that's half a year's salary, and you don't work hundreds and hundreds and hundreds of hours to make $13,600, you made it in 1, 2, 3, 4. You made it in might seem like a long time, but what is it? 1, 2, 3, 4. You made it in 2 months. You made it in 2 months by doing absolutely nothing. Like nothing. You put the trade in and did nothing. No physical labor. Right? Everybody should want to be able to do that. People ask, how do you swing? How do you swing? What's the difference between swinging and anything else? Nothing. It's nothing different. The only difference is those moves and little 20 pit moves you're looking for in a 15, 30-minute time frame. You do the same markup on the higher time frame. That's it. That's literally it. And you hold it long. You utilize the trailing stop. Drop IDK in the chat if you don't know how to use the trailing stop.
I have a question.
Mm-hmm.
So you said like if you hold a trade or whatever, like a swing trade, so like do you close it on the weekend or do you keep it open? Like how do you do it like for months? You said like because you said months. Huh?
You just hold it.
Okay.
You can't hold it for weeks if you're closing it, right?
Okay, I was just wondering because I know that I was like closed on on Fridays and stuff, so I was just making sure. Thank you.
No, it's not gonna go nowhere on the weekends. It's usually gonna stay in the same spot where it closed at, unless
Alrighty.
it forms that gap that I was explaining earlier. But yeah,
Okay.
you just hold it. So it's essential for y'all to be able to even. I want y'all to start having swing accounts. I usually drop at least 1 or 2 swing trades every week in anonymous. So there's no reason why y'all can't be what I'm about to say putting in those swing trades, because holding swing trades, it makes it so you can't look another one. It makes it so you can't put in more and more trades because you're taking up all of your uh margin level percent. All right, so make sure you're doing that. Also, everybody should be, I'm gonna drop my Instagram, but everybody should be posting this on their Instagram. Everybody should be just continue. What's a good one start? You can start with like 100. I don't know if I asked this already, but Drop a 1 if you don't know what a trailing stop is. I think I did and nobody needed it.
Repeat question.
Okay, I got you. I said drop a 1 in the chat if you need me to go over a trailing stop. Alright, enough people. There's really something in my head that I was about to teach y'all about, but I can't. This gonna make me go crazy. It's cool though. Trailing stop. Say you get into a trade right here, right? Once your trade is up, at least I usually want to say 20 pips, but 15 is the standard. But it can always pull back 15 pips, so I would say about 20. Once it's about 20 pips in profit, you can move your stop loss to your entry point. You don't physically move it. What you would do is your number right under the currency pair on your trade is going to be the entry point. He's going to have a number under your pair with an arrow pointing to the current price, which will be fluctuating. So what that means is it will look like this. G, let's just say CH, F, blah, 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 right? It's going to have a number with the arrow pointing to another number, right? This right here is going to be your entry point. So my entry point for Euro USD might be 17717, while my stop loss might be 14480. All you would do is hit modify on that trade and change the stop loss to your entry point. And at that point, it puts your stop loss at your entry, meaning that if it ever hits it, all that's gonna happen is instead of losing, you're gonna break even, right? You're gonna break even on that trade, no matter what happens. So, for example, let me try to find one.
And
I
do
have
you
a
go a
question.
little bit?
Huh?
Go ahead.
Do you go a little bit past your entry or just right on your entry?
Usually a little gem. You want to put it 1 pip above your entry because of the spread. The spread is always usually gonna put you 1 pip in the loss when you start. That's why I always start at spread. So you want to put it about 1 pip above your entry. And as it goes more and more in profit, you want to start moving your stop loss to your to profit. Say you're up 3 pips, you can move your stop loss 15 pips in profit. And then if that gets hit, you're gonna catch those 15 pips no matter what happens. And along the way, that y'all can keep securing your profits as well. You might be up 30 pips, bow. Change the stop loss 15 pips, bow. But then you also secured half of your profits. You might be in for 0.10 with 30 pips. How much money is that? 0.10 catching 30 pips. Hold on now. Hold on now. Because y'all should be answering this question. If you have a 0.10 and you catch 30 pips, what is your profit?
$30.
30.
All right.
$30.
Y'all scaring me.
30.
Y'all scaring me. $30. All right. 0.10 is what kind of lot? What kind of lot is that column? What kind of lot?
30 cents.
Huh?
Oh, you said what type of lot? My bad. Me.
Micro. No, mini.
It's a mini lot. All right. It's a mini lot. So what I mean is that's which one I'm talking about. That's a mini lot. What about this one? What column is that lot size?
Micro.
Micro.
And then this one,
Standard.
exactly. All right. Man, I forgot what I was going over. Oh yeah, you can change your lot size. So you might be in for a 0.10 up 30 pips, so you're up $30. You might want to secure half of those, right? You might want to secure half and move your stop loss and profit, meaning that instead of using the 0.10, you can change it to 0.05, which would be 50 cents instead of $1, meaning that it'll take half of your profits and leave that other half in the trade. All right, that's how you hold swing trades. You want to use, those pullbacks and things like that to be able to add more positions along the way and secure your profits and move your stop loss. You should be doing that with any trade anyway. All right, you should be doing that with anything. So I'll teach y'all how to use the fib too. I want to show y'all something. So for what I was telling y'all about this peg right here, it looks like a pig, meaning that it was basically a price where the banks wanted it to stay there and they didn't want it to move. Well, some years ago, the banks did some grimy stuff. They basically had a peg on Euro CHF, and they said that we're never gonna make price, uh, go away from this area. We're never gonna, change price from this thing. Let me go to the weekly. Good day. Y'all see this? This was a peg, meaning that this area, they said that price wasn't going to ever go any higher or go any lower. So what happened was, um, so what happened was, yeah, I am. So what happened was they they saw that everybody was literally holding a buy because they said it would never go any lower. So that means that if it did anything, it would go higher, right? So everybody was holding a buy. So they basically were very grimy, very, very grimy, and they took the peg off abruptly. They took it off abruptly one day, and it dropped from right here. So everybody who was holding these positions and high lot sizes and things like that, they basically got messed up. Drop how many pips y'all think that is. Y'all, y'all heard me? Y'all doing some math over there or something? Also, I think that's what I was gonna say. Yeah. Okay. Let's see. 2200. 2200 pips. That doesn't happen with anything other than Bitcoin. And this is within like an hour. This isn't like a long time thing. Mind you, this is a day chart. So if it did this on a day, it definitely did that on way smaller time frame. Alright. I just want to show y'all that. Yeah, somebody did put a sale, they was lit. They was super lit. Alright. Also y'all should be posting um this on Instagram. Like y'all should be posting that y'all are on a call at 2 o'clock in the morning learning about the skills. If you want to launch, if you want to find different ways to launch, this is how you want to do it. tag me, I'll repost you. You know, just show the world that y'all are actually locked into this. Separate yourself from the people that are just doing this just for clout, that don't really want to learn the skill. They'll see that you're actually working. They might be watching you on somebody else's page, right? Today they only posted one thing. Today they saw you post 4 or 5 things, plus you up at 2 o'clock in the morning learning the skill. They gonna think you. I had it happen to me so many times. Like, yeah, I've been watching a lot of people, and you just seem like you've been working the hardest. You engage the most. You care about people the most. You know, so you gotta show people these things. Look, another morning star. It's always gonna work. Always gonna work. How many pips is it? It's OD. That's 1,000 pips. It's 1,000 pips off catching a morning star for daily. What? All right. So back to your USD. Let me delete this, and I'm gonna continue to show y'all how to analyze the chart, and we can go over a couple charts and end it. Man, I'm sorry, y'all. See, they don't got no little thing to just delete this, huh? So like they should let you like hover over it all, like select it all. Alright, I'm about to leave it like this. Alright, so I'll mark this one up. Um, I remember it was a lot of people who didn't understand why I marked this monthly one up, which I'm not sure why, but I marked this one up because it was that high. I marked this one up because it was that low, and this was basically an area where these wicks kept rejecting it, meaning that it was a very, very strong resistance and price is not trying to break it, right? Then we have price actually finally coming up to it and rejecting it, right? You got a doji, which is gonna be which is gonna be rejecting it too, right? And then when price finally broke through, it was a what? Engulfing candle. And it broke through the next one. What did it do? Retest it. Broke through here. Retest it. Broke back up. Retest it. Boom. Right? It doesn't have to be literally. It doesn't have to look like you know this every time it retests. Right? It can literally be just a wick like this, because on a smaller time frame, mind you, this is the monthly. On a 1 hour, you might catch a couple candles that's just making a beautiful bounce off of this. So that's why you gotta do it like that. So then the weekly, um, I know it's getting late, so I'm almost done. Um, let's see. All right. So the reason why I put this one, is because, all right, boom. Wicks rejecting off of it, break with the engulfing and a retest, so it's valid from that. Engulfing right there, breaking retest right here. Um, it could probably be a little higher. I don't know if I like that. Alright, I kind of like that one better. Alright, yeah. Now I'll explain to y'all why. So yeah, we still have the rejection right there. Got the retest. in the long wick rejection, showing how valid it was, how price wasn't trying to break through that because it was very strong. Right. We got a bunch of strong support right here where the wicks were just coming to it. Nobody's was breaking it. Um, then we have a break and retest right here. Boom. Wick rejection right there. Boom. Let's see what else. More bouncing off of it. Right. More bounces off of it. Let's see. Somebody tell me what pattern this is right here.
You talking about like the 3 nights?
You know what it is. You love them.
My star?
No. Did somebody put it in the chat?
Oh, my W?
W for a double bottom. All right. I mean, come on. Yeah, like that's a textbook double bottom. All right. When you have these double bottoms and these double tops and things like that, they're gonna have a point where the move usually starts, where it comes back to, and where it ends. This isn't the best W or M or double bottom or double top because of a few reasons, and that's why I didn't buy that much. And I'm gonna explain why. All right. So usually when you have these moves, you're gonna have a point in the middle where price comes back to, right? Which is right here. So this is where price came back to. For the majority of the part, the beginning and the end are going to meet the exact same area where price came in the middle. So in reality, it should have looked like this. I'm gonna use it. All right, meaning that it should have really been like this. That's how it should be. All right. Sorry, you're in the background. But yeah, when you have these, you're gonna then have a neck, and the point where they all meet, that's the neck. All right. So I can put my a line right there. All right. So then this would be the neck. So if you have price coming around here, you would then know that once it broke the neck, it's gone. It's shooting in the direction that it's supposed to go. All right. So just always remember that there are head and shoulder patterns, all type of things like that. So look up. You can always look up. Just look them up. But I think they'll drop the books in the chats. Um, just look up Forex reversal patterns and things like that. Candlestick patterns. All right. So let me zoom up. Let me delete this so y'all can see a clean chart markup when I'm done. All right. So I don't think I continue. Yeah. So it was rejecting right there, retesting right there, another retest two retests actually. Um, more retests, more rejections. All right. I hope this one is making sense to y'all as well. Um, I can do one more. I'm gonna put it right here. I'm gonna put that one there because if you just look, price is steady, bouncing off of it, bouncing off of it, or it's breaking and retesting, bouncing off of it, bouncing off of it, bearish and go, right, bouncing off, bouncing off. Y'all see this? It's exactly what I was explaining earlier. Put in the chat what this is. What do you see? Put it in the chat. So only 5 people, 7 people out of the 50 on the call remember what that is. All right. It's a gap. Can anybody put in the chat, preferably take your mic off mute, and explain what the gap is, how I explain it?
I can't say it.
Basically,
Go ahead, fam.
basically it's like when an event happened in the news and like
Keep going.
it's like when so like price it had like stopped or like the market out. Can you refresh
The
my mind?
market closed.
Yeah, the market closed and then like
Uh-huh.
I get like a event happened in between, like something happened and then that's all I could remember.
All right. Y'all want to piggyback off of that?
The event happened, the market opened, and it was above the previous close. So there's a gap, and you're looking for a price to come back and eventually fill that gap.
Okay.
So,
That
look, price didn't fill this gap yet, but
wait.
that's actually very surprising now that I look at it.
We said eventually, it's coming back regardless.
Yeah, it's been a long time now. This is very rare. So just to let y'all know, this is super duper rare that it doesn't fill it back up because I still don't think it just filled it back up. This was, when was this? April 2017. It's just not filling it back up. Yeah, that's very rare, but sometimes that happens. Sometimes news is just that crucial and it never, recovers. And that's what happens. So something happened on this date with the euro, the USD, that was very crazy. And it didn't recover since. So, Val, that's basically what I'm gonna have for the weekly. Now I can go to the daily. What color should I use for the daily, y'all?
Green.
Cool, that's what I was thinking. Anyway. All right. I'm really gonna zoom in over here and mark some stuff up over here, and then mark that area because marking this up will let me know what's gonna happen over here because it's the same area, right? Um, so now I'm basically just gonna mark up price where it's basically bouncing off of points or it's retesting them. So I'm gonna mark up a couple right now. So now with these newfound support and resistance that I marked, I'm gonna put one right here. Actually, you really don't have to put all these, but I'm showing y'all like how it can look. Because with it like this, you can literally see where it's gonna go next every time. And I'm gonna show y'all how to, what to look into. So basically, now that I have these marked up, price is either going to be structured between these or it's gonna be breaking and retesting. So right here, right up is ranging from the top to the bottom. Long impulse candle, so it's not, sometimes it's not gonna retest with these long impulses. So it came to the bottom of this one, about broke that one as well. Formed, I forgot if this is three right crows or three right soldiers. I think it's crows, but this is another pattern for a sale. Three long was like that, and it ended up kept selling. So bow came there, bow, 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 bow. Right now we're trying to correct it. It formed that gap. It came back up to fill it. So bow, we came up to here, ranging from the top to the bottom. Retested this. Now it's still going from the top to the bottom. Broke and retested just a little bit. You can't really see it, but then it formed another long impulse move, right? So this isn't gonna be, these impulses aren't gonna be like the same as analyzing when it's, really ranging, because it's just shooting down or up in a direction crazy. All right. But even then, like, it came down all the way to here, bounced off that support we had. Now it came up here, bottom, top, on to the next one, and it had another long impulse move. Right? Another long impulse move. And it broke this one and it retested. This part might bore y'all, but I just want to show y'all really quick. Retested, went to the top. If I go to the smaller time frame, it's gonna be a retest right there too. But look, bottom, retest, and this is that zone we marked up on the monthly. So this is a very strong zone, right? Um, a strong zone, resistance zone, where it's gonna reject for the most part and sell. If you look, this is the only time where it didn't, sell right off of this. But every other time, wow, sell. Came to it, sell. Came to it, sell. Exception, sell, sell. All right. Now it's ranging. Came through here, retested. Came to this one, wow. Went to the bottom, retested to the top. Look, now it's structured. Besides just a few of them, which I'll, clean up at um, the smaller time frames, you can see what price is doing, right? You can see where it's going. If you look at this one, look, wow, this is a nice one. This is a nice double bottom, I'm pretty sure. If I'm looking at it correctly. Let me see. All right, we got this. This is the start of the move right here. The neck met it right there. Bow. It broke the neck. It broke this neck right here, and it retested it. So this would be the neck, and it did what? It retested the neck, and it shut up. All right. That's a slight little example explanation for that, but it gives you the opportunity to actually see what it means and what it's gonna do when you see it. All right. Appreciate everybody still on the call. We're gonna probably end this within like 20, 15, 20 minutes. All right, if that long. So yeah, so basically now price is structured. It might not be as pretty to y'all, but I know exactly what's gonna happen when it gets to these next points. All right, it's pretty structured between them. And you can see all these break and retests. You can see the ranges from the tops to the bottoms. You see this range right here: bottom, top, bottom, retest, top, bottom. So that makes it so when I get to current price, I already have these zones marked up, so I can see where it's gonna go to next. So since it's sold, it's selling right now and it's bouncing off this trend line and this resistance line that I had, I know that it's probably gonna sell right here. At least. It's at least gonna sell right here. So with that being said, like that's how you start finding your trades. You usually only want to trade off support and resistance because this right here could be, this could be a support and resistance itself. This could be a support line because if you look over here, price bounced off of this. Price bounced off of the same point previously. So it could just be coming down to here and it could bounce back off and come to the trend line, right? You might be sending drawdowns to get into this because it's not really on the support and resistance. It could even break through here, break the trend line and retest, right? You never know. So I'm gonna delete this because I'm gonna finish those up on the smaller time frames. But even with that green one that I just put, the chances are of it, dropping down to here are super, super, super high because, like I was showing y'all, it's literally rejecting off a monthly trend line. That holds weight. You catch these trades and performance on a high time frame. It's gonna be a move that's gonna go in the direction you want to for a long time. So just looking at this on the monthly, I know it's probably just gonna sell to here. Like I can catch a couple hundred pips off this move. Come on, alright, so back I can go to the 4-hour chart now. Right. What color should I use for this one? I'm gonna use blue. Use blue.
Blue.
Cool. Use a little turquoise. I'm gonna
use lavender.
I use that for the 2 hours. Alright, so now I'm just gonna mark up a couple on this one, and then I'm gonna go back a little bit to that same zone I was looking at and mark up like 2 on that, and I'm gonna leave it at that. You don't want to do too much. So I'm gonna put one right here because it's that area where price bounced off of twice, basically, and shot up like crazy. So obviously it's a valid, support line. Let's see. I already got this one. I could pull one right here, but that's really, extra. But I'll do it just to show y'all. Like price was bouncing off right here, right here, right here, kinda over here. It was bouncing off of it right there. So that's just as valid, right? It's just as valid. But I'm gonna delete that because I don't want to have too many. All right. I would actually rather. Put it right there. All right. Put one right here. And then I'm gonna go over here real quick and mark up like 1 or 2 maybe. I like this wick area right here. That tells me a lot. So I can put one right here. And then that's really all. I can put one right here. It's really unnecessary. So I'm gonna go back to the current price, and now we're about to try to, do our little finishing touches and get our entry on this trade. All right. Like bro said, we're gonna use some lavender. Which one is lavender? This one. Right or left?
The left one, the right is pink.
That's what I thought. I just gotta make sure. All right. Now it's really just like you really don't even need another one over here for real. Um, but if you just want one, some people like to, find quick TPs, quick scalps, and things like that. Smaller trades, there's nothing wrong with that. That's how you trade. That's how you trade. So I can put one right here. I put it because bounce, 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 bunch of bounces, bounce, retest, bounce. So like now you will go to your 1 hour, and this is how you start finding your trade. I mean, finding your entry. Tell me what my entry depends on. It's one term.
Um, is it candlestick patterns?
Yeah, what's the technical term for that?
Price action.
Yeah.
Yeah.
All right. So now I'm looking for price action. Now I'm looking for candlestick patterns to tell me when to get in that trade. Right? If I'm waiting to get into this sale, do I have any reason to get into a sale right now? Are the candles showing me anything for a sale?
Hell no.
Okay.
Nope.
So I'm gonna wait. Also, it's not on any support and resistance that I have. It's in the zone. So it's no reason for me to get into anything because I'm not trading unless it's on a support and resistance. Unless it just I missed the support and resistance and it just shows me a beautiful pattern or price action to get in. Right? All you gotta do, my space bar ticket. Um, yeah, I mean, like you can just look up stuff, like this how you see this one. These are more of supply and demand zones, right? Which I can show you. These are. This is how your chart is supposed to look as simple as possible, right? It's why I don't have as much, but when I do trainings, I want to show y'all how to mark these things up. So you want to mark up these points, and it's gonna show you now. You might have a bearish engulfer, and that might tell you, all right, cool, that'll tell me to confirm my sale. I can get in now, right? Yeah, you might have a bunch of reasons to get into a trade, and that's what you need. You always need a bunch of reasons to get into a trade. Every single time. Every single time. All right. And then your entries also depend on market structure.
And they're still on this call.
Um, it also depends on market structure, right? Higher highs, higher lows. No, I don't use any indicators. Higher highs, lower lows, lower highs, everything like that with uptrends and downtrends. If you don't understand market structure and everything like that, I'm gonna have, Bishop, one of my top leaders. Uh, I'm gonna have him do a call because he's like the market structure king. All right. I know it too, but he just sauces it up a whole different way, right? So I'm gonna let him take care of it. So in terms of market structure, looking at this trade, um, we're still on this downtrend, right? We're on a downtrend, meaning that let's see, well, I can show you how to use fib on this too. So when you're on a downtrend, it's really not the best downtrend, but it's a downtrend nonetheless. And you have what consists of a downtrend? Well, what is a downtrend?
Lower highs.
And what else?
Lower lows.
Lower lows. Yeah.
Mm-hmm. All right.
Lower low.
Yeah, y'all got it. I'm sure. I'm sorry. All right. So if you're in a downtrend, boom, lower low, lower high. Lower low, lower high. Lower low, and now it's fixing to form that lower high. Hold on, girl. My fault. So, like I said, it's fixing to form this lower high right now for this downtrend. All right. So that lets you know that it's probably about to pull back and form that lower high. So you should wait. So the way that you can see how far it's gonna pull back to is by using your Fibonacci tool. All right. You can use your Fibonacci tool, and that's how I'm gonna end this call by showing you that. Excuse me. So in order to use the Fibonacci, um, mine looks a little different than yours. I really don't even want this like this. I don't like the little color, but when you have your Fibonacci, basically, it's gonna be a tool to see how far back something is gonna pull back, to see how far something is going to pull back. All right. So these little numbers, these are called PRZs, price reversal zones. Price reversal zones. All right. The way that you use a fib is you're basically saying, all right, I'm looking at a move. I'm looking at a downtrend move, right? I'm looking at a down impulse move or anything like that. Or you can be using it from low to high. And you could be looking at an up move and you're trying to see how far it's going to pull back before it continues going up. Or on this one, you're going to see how far back it continues, how far back it's going to pull before it continues going down. All right. So this 100%, these 100%, this is basically saying top to bottom. This is 100% of the move, meaning that if it comes back up here, it pull back 100%. Or if it pulled back to here, it pulled back 23% of the move. And it's gonna either come right here and go down, or it's gonna come to 38% of the move and go back down. 50, 618, 78, or it's gonna be 100. And the reason why I mark these ones more sideways than these ones down here is because the farther back it pulls, the slower and longer it's gonna take for it to, come back down. If it just bounces off something like the 23 or 38, it's usually gonna shoot back down. If it goes to like 78, it's gonna take longer to do its thing. But the most popular price reversal zones are the 618 and the 38. I like the 38 the most. So I'll explain to y'all how to use it on this move right here. That's it. So and how we can see, how far it could possibly pull back before it continues dropping. Appreciate y'all staying up to about done. I am freaky. All right. So the way that I do it, Fibonacci, they're subjective. Everybody does them differently. As y'all practice, y'all are gonna end up doing them differently. So I'm gonna use my fib, and I'm looking at this down move right here. And I'm trying to see how far back it's gonna pull, because obviously, what is it pulling back to find right now? We just went over. What is it pulling back to form right now?
A flag and resistance.
No. I just went over it in terms of market structure.
Can you repeat?
Oh, support.
All right. So with our downtrend, we have a lower low, lower high, a lower low, and it's trying to form what right now?
A lower
Oh,
high.
Lower high, yeah.
Fixing to form the lower high. All right. So I'm gonna go from the top of the wick to the bottom of the wick. All right. I'm gonna go from the top of the wick to the bottom of this one. All right. So now we have our Fibonacci, and we're gonna wait for it to get to either. It usually blasts through this 23, so this one isn't that valid, but it's very possible that it'll do it anyway. But my favorite is this 38. So my analysis is that it'll probably come back to this 38 before it continues to drop, right? So in terms of orders, like I was telling y'all, the sale limits and everything like that, what could I place right here if I think that it's gonna come up here and bounce down?
probably a take profit.
So,
In terms,
Sell limit.
yes, sell limit.
Okay. I came in late on that part.
How you feel? So it's the sell limit, right? So if it's coming, if I could place my sell limit right here, I might just do that, right? And I also have another reason to place that sell to think that it's gonna come to right here before it drops. These wicks right here. These are our rejection areas, meaning that it could come right here and reject out that same area. So I can mark up, boom. It's not ironic that that wick is the same price as that 38. It's not ironic at all. So I know that price could easily be coming back up to right here before it drops. All right, it'll be coming back up to here before it drops. So I can easily, if y'all want to right now, y'all can put a sell limit in for this in your demo. Do it in your demo. I like it, but I don't want to call this. So put it in your demo, and you can see. All right, boom. You can set a sell limit at 1.10911. All right. You can put the sell limit right there. And so, um, I hope it did. So now, if you're on a sell limit, you're placing. If you're on a sell, your take profits are going to be based off of what? If you're in a sell, your take profits
Your
will be based off
support
what?
lines.
your support lines.
Yep, it's gonna be based on your support lines, right? I can easily use this 23 to be my support line because these fibs are basically supports and resistances too. So I can say this might be my TP1, right? I can be like, boom, this could be TP1. Change it to name. Make it look thicker. Then I'm gonna do another one at my next support. Boom. And I can zoom out, and this could be my next one as well. Because price, once price breaks this right here, it got this whole area that it could, this whole gap that it could fill, and it could drop all the way to here. All right, so boom. Yeah. How many close? Yeah, and then this could be your TP4. All right, and then your stop loss could be like I said, 30 pips away, and you want to try to put it up over the next, stop loss. I mean, the next resistance. So if this is 911, that means that our 30 pips away would be 11 211. Be about right there. Am I tweaking? That look a little far. No, that's 30 pips. Alright, so like I said, I want to put it above the resistance though. So if this is our last resistance, clearly, I want to put it a little bit above that wick. Give it some space. So now it's about, I'm gonna put about 35. Boom. So now you can mark it up like short. So now you're literally risking 35 pips for 97. You're risking 35 pips for 100 pips, which is a great ratio if you ask. All right, by placing that sell limit, you can do a little, if you have an arrow saying that you think that it's gonna go up to here before dropping down here. So now y'all need to understand that if you want to practice, the way that you practice is you start marking up these pairs and entering and marking them up and waiting for price action. You wait for price to get on these supported resistances. So say that it got to this 38 and then it formed an even star, which is something I've been going over all night, which is just another confirmation for a sale, right? Or you might just see consolidation and a bunch of wicks coming up here rejecting it, and that might be enough, and then you might have a bearish engulfing. Boom, then you get into that trade. Whenever you're on these supported resistance lines, you want to wait for price action. You want to wait for a pattern to tell you to get into a trade. You always want to wait for that pattern to tell you that. Because if you just get in, it could start doing anything. That's how everybody starts getting in drawdown. That's how everybody, starts getting confused. So when you're marking up these things and trying to find your entries, all you want to do is wait for it to get on the support or resistance. That's why I'm not getting into anything right now, right? I said it might pull back to here and then do its thing, or it might pull back to here and then do its thing, or it might just consolidate right here and then drop, right? You never know. But like I said, it's a couple of reasons why I would think that it would come to here first, right? Trying to form that lower high. Then we got the 38 pullback. Then we got this rejection area, and we got this gap that it needs to fill as well, right? It just made all this impulse. It needs to fill this gap first. So that could be what it's doing. Then it could drop. All right. Drop it with me if you with me, if this has been very helpful to y'all so far. If y'all learned a lot. Um, I hope y'all did. I hope y'all posted it on Instagram. Now I need y'all to start going on your chart all weekend and marking up these support and resistance lines where you're seeing a bunch of bounces off of. You're seeing a couple, maybe a trend, right? You see a trend, you might see a break and retest. You see these forms, these patterns being formed, and you're able to use the Fibonacci and things like that. And now you can enter your trades on your own. Now you can at least mark it up and mark up these things. That's all I did for like 2 months straight. All I did was just kept going on the charts, and I would just use these and come back to them in a day or two to see if it worked. Throw them in my demo, and mark these up. Because a lot of times you'll surprise yourself and you'll make yourself so happy because a day or two later you'll come back and you'll see that the price executed fully. Your whole green box is full. When you see your green box full, it's the best feeling in the world, I promise you. It's literally the best feeling in the world. All right. Um, and for everything else, I try to make sure that y'all learn the basics so y'all can go tell other people about this opportunity, bro. Like, drop a one in the chat if you saw my residual today. Like, if you saw my residual check today, drop a one in the chat. A lot of people did. Drop a two if you didn't, though. I'll show y'all. Just for some motivation, bro. From spreading this opportunity out of love, building a team of over 1,500 people in only 7 to 8 months. I worked my butt off, and moved in selflessness and told people about it before I was a master trader, before I made thousands of dollars, before I made hundreds of dollars. I was telling people around me about it, and now we're all very, I would say, kind of wealthy for our age. Right? I've created two other chairmen under me. Created a couple P5000s, a bunch of P2000s, a bunch of everything else, right? And a bunch of people who trade, who follow the steps, right? And now they reward me for that. People who are working with 20, 30, 5, 10, $100 accounts that want more, who know the information, but they don't have the capital to invest. Now you're able to get checks like this on a Friday. On a Friday. Somebody that I know that's one of my close friends, that's a chairman 100. I don't want to say his name, but he got $42,000 today. He got $42,000 today, bro. There's people who work their ass off for that every single day and night, working overtime daily just to get that. He made it in a week. So we can all do it. Everybody in this call can do it. Put your mind to it. Don't be selfish with it. Selfish with it. Because if the person who got you onto this opportunity was selfish and didn't post, you wouldn't be here either. So why not do it for somebody else? That just doesn't make any sense. All right. Well, I love y'all. Be safe. We're gonna have a good night.